Thanks, Mark. So I will be going to an island just because I want to be like Mark. I'm leaving on Saturday, so I'll be out for 2 weeks, but you'll get Sean and Nitin presenting, which is an upgrade. So you'll be in very good hands with those guys. So everything changed with the invasion of Ukraine by Russian forces, both from an economic, political, geopolitical, and social perspective. And I think it's creating maybe the most complicated and challenging investment climate for us in decades. And you just look at the headlines today with, CPI was out, headline CPI up 8.5% year over year, with it up 1.2% month over month. But core inflation was only up 0.3% month over month, lower than it was expecting. So you're getting these conflicting signals there. And we'll talk more about that. Housing was up, housing inflation was up about 10.2%. And you also had, 5%. You also had airfares up 10.2%. But interestingly, there's some readings that are pushing the core down that are really important. We'll touch on them. But you also have China going through a really difficult period. And when the second largest economy is going through some changes like they are, and their Premier League came out with a warning for growth on their growth prospects for the third time in less than a week. And they talked about extensive difficulties that they're seeing. So it's a much more negative outlook from Chinese leadership. And they're also working on some political issues that are very important for them. So they made a major announcement in China about prevention and dissolution of financial risk. It's one of the pillars that Premier Li and President Xi have promoted of financial risk. They want to make sure that they don't set up for a major crisis down the road. The other two pillars are the two big battles that they're focused on economically are precise poverty alleviation. They want to make sure that they bring the poverty levels up and bring more people into moving up to the middle class or certainly out of poverty. And then their other element, which is prevention and control of pollution. These last two, they've actually made announcements that they're making great progress on. And those who are into climate change would argue whether prevention and control of pollution would be considered a great progress to date. But let's just go through and talk about some of the different challenges and opportunities that are out there and why this is such a difficult environment. So the well-publicized negatives, and Mark touched on this, and we're about to have another round of what people are expecting to be very violent assaults on parts of Ukraine, whether there's whether there's chemicals or nuclear used or not. It's clear that this is ramping up to be a really violent assault coming. And what does that mean? And who else does it draw into the battle, and in what ways? And what does it mean for sanctions and the like? I think the other very well publicized issue is the supply chain and inflation issues stemming from the war, particularly around food and energy, which are ongoing and no near-term solutions. China's zero COVID policy doesn't seem like they've maximized the opportunity that they had with their lockdowns to get vaccines and stuff in place that would allow them to open up better. And then you still have the ongoing economic challenges of the real estate sector, their tech champions, and what the role of the tech champions play while they're trying to deal with these other risks. And where do they stand with the geopolitical elements of supporting Russia on one hand, and then not alienating your best customers for exports on the other is a real challenge for them. I think the energy stresses in Europe continue to be a big issue, and they're adding to the political stresses that are going on there. And all this is going on while recession risks are rising for the rest of the world. We're less concerned about that for the US, but certainly Europe could be moving more rapidly to a recession. Russia is already well on its way. It looks like they're going to drop 10% in GDP this quarter. So a real challenge for them. A 10% drop this year in GDP. So not an easy climate for them. And then China is really battling. And the fortunate thing for China is they didn't spend a lot of bullets last year in supporting the global economy the way they did in 08, 09. So they still have the wherewithal to very targeted stimulate their economy, but is it going to be enough? I think the other big issue is we've seen a pretty significant move up in rates, which is leading to multiple contractions, but it's also pressuring valuations across all asset classes. And that makes people rethink what the risk and reward they're willing to take on for the environment we're moving into, not the one we've been in for the last 10 years, where we've had highly accommodative conditions across fiscal and monetary support. And all this is leading to a tightening of financial conditions, which is getting people to be more worried about recessions than maybe the reality that's coming right now. Although I do think recession risk in Europe and outside the US are high. I don't see it as a big risk for the US right now. But just to give you some charts of how we look at this, I mean, you see this is China's zero COVID policy in work with their 7-day case average. And while it's come down a lot, their lockdowns are working, but it's a very difficult way to run your economy on lockdowns, and it's creating new supply problems that exist. So this is going to be an ongoing issue, and it's going to be very difficult for China to see significant growth in their economy with some of the headwinds that are being faced there. I think the other issue for the US is you're seeing 30-year mortgage rates move up to close to 5% again. But to keep this in historical perspective, if I took this chart back to the 40s, those would be rates that we've last seen back in the 1950s when we're about to go into an extended run for economic growth in the US. So I think this is a real issue in the short term, but in context, it's not as big an issue as I think people are making it out to be, although housing prices should likely moderate their sharp moves up. Used car trucks have been one of the big, used cars and trucks have been one of the big areas for inflationary pressures. What's fascinating about this is for the last 2 months before the announcement today, they'd come down about 5%. In this month over month report, used cars were down 3.8% for the month over month figure. So you are starting to see that come down. And if you saw them come back down to where they were pre-pandemic levels, you would be looking at core inflation coming down by almost 0.5%, just on used cars alone. So this is an important thing to keep in mind. And as we see some of the easing of supply chains, this is what's going to drive core inflation down. So while it's a negative on the surface, if you dig deeper, it's not quite as negative. So some of the less well-publicized positives, I've talked about ad nauseum about the fiscal and monetary stimulus that's been thrown at the system for the last 2 years. And I think this is one of the key reasons why the markets are only off, 5 to 7% off their highs. And you're starting to see pretty robust economic activity in a lot of areas. You're seeing consumer net worth at record levels, jobless claims at the lowest level since '68, Canadian claims at a historic low, corporate profits and earnings are at record levels, as is CapEx for the US. These are all major drivers for opportunity, for hiring and the like. I just add reshoring and onshoring, creating new jobs and opportunities. And this is something that Nancy Lazar has highlighted for some time from Piper Sandler now, formerly Cornerstone Macro, where she's talked about the Midwest being the best emerging market. And if you look at the jobs that left from 2000 to 2010 in the manufacturing sector, we lost about 7 million jobs. And with those jobs, we lose, that's just the manufacturing. The multiplier effect would be 3 to 4 or 5 times that in other jobs supporting those jobs. So bringing them back, and we've seen a 3 million increase from 2010 to 2020, you're starting to see why we're chipping away at some of the unemployment problems and why this participation rate's moving up and the like. And I think the other really interesting issue, and this has been the big surprise, is the NATO response to the Russian aggression has been much more unified and stronger than I think people would have expected. And I think that's actually a really big positive economically for the developed economies, because in that fragmenting, you would have much higher inflation pressures because you would have a split off of who's supporting Russia, who's not, and how it's creating big problems in terms of where capital flows. We do think one of the big issues coming out of what's going on today in the world is a significant redirect of capital flows along the lines of trading blocks. And they're not going to be just trading, but it's going to be economic and military supporting blocks of like-minded nations, likely being autocrat versus democratic nations lining up, which is what you're seeing. And a big part of what Russia and China have been desirous of is to see the US standing come down and the US power come down. And they were hoping that fragmenting of Europe would allow that to happen. And I think the reverse has happened with the invasion of Ukraine. So I think these are some of the big challenges. We can show you these numbers though, and this is pretty staggering when you think that consumer net worth is basically doubled in the 7-year period. And what have we been hit with? The great financial crisis. We've been hit with a whole series of problems in Europe, Brexit, wars, the whole thing, and yet consumer net worth is at record levels. What this does distort is the fact that the poor, whether it's a poor nation, a weak corporation, or the lower segments of the net worth in the economy are all suffering greatly from this rise in inflation. But you still see massive spending powers in the global system. And it's important to note that liabilities have been managed very effectively throughout this time since the financial crisis hit. So net worth is going up, but liabilities have been somewhat managed down. That's a big part of that is the low interest rate environment that we've had. This provides massive support for the system and can carry us through some of the challenges we have going forward. The other big thing is look at corporate profits on an after-tax basis. And through all the challenges that we've had, even the last 24 months, the dramatic move up for corporations has been really impressive. The same thing would show for earnings. And the same thing shows for CapEx at record levels. And this is really what's going to drive us bringing back business to the United States, allowing us to get safer and surer supply chain systems set up. And I think that's the other big shift that's going on because of the Russian invasion, is you're starting to see a shift from just-in-time supply chains to safest and surest supply chains, which has whole different elements of where capital is going to flow and who's going to benefit from that. But these capital expenditures will allow us to do a lot more with less inside the US. That's going to make us a lot more resilient and less dependent on the autocratic nations that we've been so dependent on for some time, particularly China. Shifting gears, I just wanted to share what the perspectives are from the US. And this is a Gallup poll from 2 weeks ago. And they were citing the most important issue, the most important problems the US is facing. And it's fascinating that Congress, government, and politicians still rank #1 and are on the upswing. Obviously, the big move in inflation concerns and cost of living concerns starting last year showed that even the consumers were ahead of the Fed in this area. And that's general economic concerns. What I think is interesting is the flattening out in the last quarter or so of general economic concerns with the big push towards inflation and how our leadership is acting. And just to look at this more broadly, you have inflation, the economy in general, both trailing government and poor leadership, but the situation in Ukraine very high. But think of the issues that were top of mind last year, whether it was the gap between the inequality, whether it was racism, whether it was immigration issues or the coronavirus. Even coronavirus in that 3-month period dropping from 20 to 3% of the issues is most important. Is fascinating to see how this is changing and where we are. So I just want to close off with, what does all this mean for investors? And we just published our latest investment outlook. I'm going to try and put it into the chat in a minute. But central banks are going to be forced to live with higher inflation. But I would just say that we think the Fed, in their talking up inflation, has done a very good job of working to reset the expectations that they're serious about inflation, which in our view means they will likely be less, they will have less of a requirement to move rates up as high as everyone is expecting them to do, because the market's doing some of the work for them. And the higher the inflation expectations go, the slower the consumption goes, it slows down consumption, which slows growth, which takes some of the heat off the inflationary pressures. So we think this is not as negative as everyone thinks, but clearly if core inflation is trending on a trend like we're seeing in this month, and you're also seeing used cars come down and housing gets more normalized because of the move up in interest rates on mortgages, you can start to see some of the inflationary pressures ease, and that's going to allow us to move forward in a healthier way. We still favor equities over bonds. You lost about 8% in your 10-year treasury this year already. Not a great setup. If you're in the German Bund, which has moved from minus 0.2 to almost 80 basis points positive now, you can see where people are losing a lot of money in fixed income. We prefer the US over the rest of the world for the reasons we talked about. We think the recession risk is much lower here, and we favor strong balance sheets over weak. I think this multiple contraction issue is going to create big differentiation in returns, both in public and private markets. And I think you really want to focus on quality and stability of earnings stream and what companies can do with their cash and still avoid the extremes in valuation. The secular trends are going to still be at play, and that's, in our view, the safest way to invest in this environment, because these are the things that are going to attract capital for some period of time. But it's really going to be about earnings and how you're using your CapEx to drive stock performance. And it's going to create some very unequal beneficiaries, Mark, as we see this going forward. So I'm going to stop there and we can open up for discussion.
Great. Thanks, Stephen. Questions? Hi, Jack. Comments?
Hey, Steve, those CapEx expenditures that you showed us, even if those were adjusted for like inflated dollars, is the trend still up?
I think in the near term, absolutely. But I think the way to look at it is this steady increase in spend and where it's being oriented to is also total CapEx is being more reoriented to productivity and tech spending. So tech is now over 55% of CapEx. And as that keeps moving up, that actually creates the offset to what you're raising. So I think it's the way companies are going to look at this is they're going to spend at a very high level. Those who can afford it will, and that'll allow them to offset the inflationary pressures that they're facing and lower their cost or actually keep their margins higher. So I think in the near term, the answer is it absolutely has, Tim, but I think over the longer term, that matters less than are they really getting their cost structure right and their productivity up.
Okay.
Stephen, along that same line as capital expenditures, net worth, how is taking into account inflation, how much is that increase really of net worth? That's the first question. Second question is China, given China going through what it's going through right now, how much of a threat is that to the US economy, taking into consideration reshoring, onshoring, and what have you? Thank you.
So the first question on we doubled consumer net worth in a basically 11-year period, and inflation during that 11-year period was probably growing at less than 2%, right? The Fed was trying to get it to 2%. So I think the rule of 72 would say that we grew at a much faster rate than inflation on consumer net worth, which was the design. Actually, if you go back to it, that is what the central banks were trying to do when they created the zero rate environment, was to inflate assets to defease the debts that they had. And what's important about that chart is the fact that our liabilities have stayed fairly flat while the net worth is growing is really the key element of that. And I think that's one of the things that's often lost in the discussion about what the Fed was trying to do, is it was really that a debt problem, that to deal with the debt problem, they were inflating the assets to defease the debt burden. And so far it seems to have worked to some degree, but the problem is it created greater inequality, which leads to another issue. Your second question is a fascinating one because China has the wherewithal right now to navigate, to manage their growth, probably not at the 5.5% target that they set, but probably at a 5% target, because they can do very targeted stimulus in the areas that they need to support to get their numbers where they want to get to. So as long as they're doing that and avoiding them tipping themselves into recession, that should protect the US. It's kind of mutually beneficial, mutual destruction if we don't manage this right together. And I think they're going to be very mindful of that. The other thing is she, again, is working towards the party Congress in October. So he doesn't want any negative surprises between now and then. So they're going to work to do what they can do to stabilize the economy so he gets president for life there. So I'm not as concerned about that in the near term, but if they lose control of the COVID issue, which is a question for Bill, I think that's when things can turn south pretty fast. The other element is, do they get secondary sanctions because of further support for Russia? And that, I think, is the bigger risk of what China does to topple, China's economy does to topple the world into recession would be, I think, sanctions on them.
Thank you.
You're welcome.
Stephen, I'll just jump in like super quick in the sense that China's zero COVID policy is definitely problematic because COVID's going to be with us, like period. It's going to be with us. It's going to continue to degenerate. It's going to become much more just like a flu, common cold. So pursuing a zero COVID policy doesn't make sense. And the degree to which, they're taking these draconian actions, I think ultimately is going to be very counterproductive. So, it depends on like when they wake up to this. I don't know. It's very curious. And even, the variants that have come out continue to be, more contagious, but milder. And that's just the way it's going to go.
Yeah, they put themselves in a bit of a box, Bill, in that their refusal to use non-Chinese vaccines has put them in a considerable disadvantage. And now they're being obstinate about it. So they wouldn't take them if they could get them. And, that does create a perpetual problem for them that you don't get to herd immunity. So I don't know how they get to where they live with it. So I think
Mark,
you're right.
I would really like to respond to what has just been said here about this site. Okay, I've been spending a lot of time here in Chicago, also working with grassroots groups who are, working to try to improve the COVID response on the part of the city and the state and the school board, particularly. We have a lot of information that basically contradicts what everyone here is saying about this becoming like the flu, like an endemic. There's a lot of evidence to show that we are far, far clear from this actually being a pandemic, moving out of pandemic. And we're going to see increasing instances of like what's going on in China. Philadelphia, for example, just reinstated the mask mandate.
So Lauren, why don't we cover this? We're going to do a virus update, but if you have some information
if I can, I'll even try to. I have some experts here too that I can maybe help throw in there, because like I say, what seems to be going on is that now you could say even among people who know about this, it's becoming, you could say, opinion, in the sense that there's evidence to line up on either side of the argument. Basically.
Well, let's get all the evidence. I mean, I have seen hospitalizations far way down that goes to what was being said, but let's get your evidence into the mix. Others on that or other topics Stephen mentioned?
Mark, if anyone has some insights from Europe into the French elections, I think there's something fascinating coming there. Anyone on the call from Europe has any thoughts?
Yeah, I'm wondering.
Well, we were discussing it before you started, Stephen, that it looks like the left most of the left candidates, while they haven't come out and endorsed Macron, have said that they're encouraging people not to vote for Le Pen. And as you had pointed out earlier, that could be the thing that swings it. However,
Lauren, let's
yeah,
let- let's actually- let's
however,
ask Eddie.
most of the Le Pen is doing a really good job appealing to concerns that the French electorate has over elections. And they kind of polled and showed that French voters who think inflation is their most important issue, a lot of them are gravitating toward Le Pen.
I just thought, Eddie, that you're closer to it, at least historically, if you got a view on this.
The interesting thing in France is that the viewership or the left and right has been shifted to significantly to the right. There has been no dominant voice on the left side, and all candidates have sub 10% in sort of share. Whereas obviously back in the day, so to speak, when I was younger, there have been very strong voices on the left and very strong presence on the left. And
Sure.
America views France as the socialist slash communist country. And actually right now the view is clearly moved to the right, amongst others through Macron, who is sort of center right. And an increased sort of extremist view, which is obviously a little bit disconcerting for a lot of people. Le Pen, though, I think, if you like, smartly moved a little bit away from her extremist view and tries to be a little bit go to the moderate side to pick up extra voters. As it looks right now, though, and I'm always a fan of putting your money where your mouth is. So I look at sites like Predicted, who are sort of a marketplace for betting on these things, for better or for worse, by the way. And Macron is still a significant favorite to win, I think by 80%, 75 to 80% ish.
Eddie, does it still exist in French society that you have certain sectors or certain like industries that are like tied into one political party or one political sentiment? Like I understand that as recently as like the 70s, if you wanted to be in the French film industry, you pretty much had to join the Communist Party. Does that kind of thing still exist in France?
Yeah, it's even it's mostly linked to top universities in France. The top universities deliver basically all the political candidates. And if you're part of that university, I have a friend who's part of one of those universities, HEC, and as a result of that, he gets tremendous privileges, and you can do things that you normally can't do as a business person. So politics is very tied up to where you come from. Where you come from is very tied up to what university you went to, more than anywhere else on the planet, I think. So that's to a certain extent still the case.
I always found that extremely fascinating aspect of French society, right? Is that like it's almost literally like whatever decisions you've made by like age 18, 19 seem to like dictate what's going to happen for the whole rest of your life.
I think the decision making is basically in the hands of quite a few people, which is for us sort of a little bit strange to see and a little bit scary too. But that's the take. I mean, I think we have to closely follow it because.
Eddie, what do you think of the right's pro-Russian views? They seem to be, the French right seems to be much more aligned with Putin than.
Are you saying, Stephen, in relative to the right's pro-Putin leanings here in the U.S.?
I was going to say, I just read an article this morning that in the U.S. there's also significant.
No, I'm not. I wasn't comparing to the US.
Historically, France has a lot of guilt and still sees Russia as a big partner and somebody who we have to sort of pay tribute to.
Now that's an interesting concept, because I was on that same podcast where the Germans are giving 220 million euro to Russia every day for gas. Why they only gave 5,000 helmets at the beginning is this guilt to the 27 million people. What was them combined with Stalin?
Yeah.
But, it's complicated.
So what you're saying that there's still a tremendous amount of guilt in French society about their, you could say, lack of response, for instance, during the Stalin years, or the connection that some of the left parties had with the Soviet Union. Is that what you're saying?
Not about that era.
About Second World War, the fact that there's got 27 million Russians were killed.
That's more the German, not the French. But well, again, I wish we had Merkel, to your point, Stephen, for months and months.
Yep.
But although this same podcast that I was showing,
Do you think that there would have been any difference if Merkel was still the chancellor?
Well, yes, we talked about this. You go back and look at all the archives. But moreover, it was really interesting, the whole lead up to what's, if she was endorsing Nord Stream 1, yeah, there's no Nord Stream 2, but Nord Stream 1 is crushing it right now. And I don't know where you are in Holland on this, but it would be a 6% hit to German GDP if they shut down the gas, as I mentioned earlier.
Well, you said that you were gonna either give us the link to the podcast or come up with how they came up with that 6%.
I'm gonna give you the link to the podcast. I gotta go back and look at my podcast.
Yeah, I would like to know how they came up with that figure.
I'd like a new phone. Looks like a new phone to me.
What? This?
Yes, is that new?
No.
He has phone envy.
I have phone gadget envy. Dude,
I listen to so many podcasts. I gotta find which one I was listening to. Okay, keep going.
No, you were talking about you were mentioning 6% drop in German GDP.
Yeah.
That's where we were.
Well, I mean, it makes me think of lots of solutions, but then you guys might think, they need multiple.
Can the U.S. afford $200 billion a day to subsidize German energy, though? Is there the political will to do something like that? I see no one jumped out of their seat to respond to that. Stephen is shaking his head.
Yeah, I think we'll deal with our own problems. We're not gonna subsidize. We'll help with providing energy where we can, but they don't have LNG terminals, so they don't have the processing to take LNG and degasify it.
And the industrials they can't ship from gas. It's the feedstock.
Yep.
So it's complicated.
Yeah, it will take significant amount of time. You can't just overnight shut the gas off. That just doesn't happen. In the Netherlands, by the way, they're trying to actively rethink they've shut off their gas because a couple hundred Dutch citizens lost their homes, which is a big travesty in Holland, and so they shut off the whole sort of gas winning, and so now they're rethinking it and say maybe build those guys new houses and get some gas from our own soil. And the Netherlands, their dependency on Russia is much less in terms of gas, so it's much easier to solve.
Chris, I don't know if Chris White I can't see him, and he's in the shadow, our energy guy. Chris, you there? Are you just for your energy viewpoints, how are you seeing the energy markets?
You're on mute, Chris.
He's in process of unmuting. I can see it. There he is. Hi, Chris.
Got it. Things are a mess right now. It's very confused. I think a lot more Russian oil is getting to buyers than was the case just a few days ago, but at very deep discounts. I guess that was probably something we all expected. So,
and they're blending to get away out from under some of the sanctions, right? Some of the trade.
Yeah, that's just another piece of monkey shine, right?
Chris, are you saying that that there's a lot more coming out of Russia from before that we did not know, and there's
no, I'm saying when the sanctions were originally put in place,
Right.
There was a moment when almost no Russian oil was flowing. Almost
Okay.
none, even to parties that didn't give a damn about the sanctions, because there were problems with insurance and all sorts of other
Mhm.
ancillary things. But those are working out now, and you know, the spice will flow, as they say. And you know, there are people who will take this oil at very substantial discounts and be happy about it.
And
Unfortunately,
is that like what the Iranians do through Dubai, that they do the same thing? They
Sure.
ship oil through.
Sure.
So, and the Russians would be doing that, I'm assuming, through China, maybe Kazakhstan.
Some of the trading houses are buying oil and making a big deal out of, you know, we're going to donate the profits and this kind of stuff. And you know,
Interesting.
we'll see about that. You never know. So
What about US? Are you hearing, since you're sitting in Houston, you know, US policy or US producers? I mean, it's obviously the break evens are, you know, should be opening up economics for more wells, but what are you seeing on the ground or hearing?
well, you watch the rig count come up a little bit every week, Mark, right?
Yeah.
But this has been overwhelmingly private companies and not the publics so far.
Mhm.
So I read something this morning actually where JP Morgan claiming that the share of the rig count hired by private companies reached 62%, which is unbelievable practically on the thing.
Yeah.
So what's driving this isn't so much economics, it's the Shale 3.0 covenant, where all of these companies have agreed to return money to their shareholders instead of just reinvesting it in the ground, because they did that for more than a decade and it did not avail them. So
Chris, I heard that the US producers were spending something like 600 billion on CapEx pre-pandemic, and now it's down to a fraction of that, like either between 60 and 150 or something like that, which means they're taking that money and putting it into buybacks and dividends and dividend payments. And I think that's the state, whatever that actual number is, Mark, that's the state of it. We're investing, you know, less than a third of what we were investing before on an annual basis. So just put that in perspective. It's going to be hard to see how we're going to get massive production increases with that.
Is that also on the gas? We heard the export of LNG.
Well, they're usually brought up together. So it's,
Well,
the LNG export capacity is essentially full, Mark.
Yeah.
So this is really constrained at the moment. It doesn't matter if there's more gas or not. You're not going to be able to get it to Europe. So, you know, and the lead time for a new LNG train with the permitting and the construction and everything is sort of 3 years fast track. So
are you saying from the terminaling, it's constrained, it's at full capacity or not production, or both?
terminals, LNG export terminals, LNG gas, you know,
They're at full capacity.
essentially, yes.
and there's two sides to that problem, Chris. It's we're at full capacity here, and the places that need it don't have the terminals to actually take it and degasify it, right?
That's also true. Yeah.
So you can't solve the problem by a wish. It's going to take a lot of build out.
Even if we had it, Germany doesn't have a terminaling either.
Right. And natural gas has always been a local product for that reason.
Chris, the Italians just signed a deal with Algeria for gas, and I think they're dependent on 40% of their gas comes from Russia at the moment. And they just signed a significant deal with Algeria. And those
That's different, Adam, because if you've got a big pipe already there and you have pipes from Algeria, you can do some things with compression to
Right.
increase the capacity through the pipes. And that doesn't have a 3-year lead time. May have a lead time measured in half a year, 3/4 of a year, or something like this.
So these are piped and not LG, not
The Algerian gas is pipe, yeah.
okay.
Chris,
Thank
is the Levantine field that Noble was involved in the Mediterranean, is that ready for production yet? That big field?
I think a little bit of gas is being produced there, but not a whole lot, Stephen, right?
It's a big reserve.
It's a huge reserve, yeah.
That's one that they got to figure out over there. Noble and I think Total are involved in that one.
Well, there's a lot of gas from Egypt running through Israel and then up to to some of the islands here. There's a string of big gas that needs to come on stream and go to Turkey and Southern Europe mainly. You know.
Israel
But
production.
there's no infrastructure, right, either. So, and this is not something where you can snap your fingers and it's done next month either.
Yeah.
So,
But you mentioned Egypt, but Israel has a lot of gas discovery. What's the
Sure.
status there?
sure.
That's the same field, Mark, I was mentioning. The Levantine field covers that whole area.
I got okay. Sorry.
There are other fields, but this is the massive asset that exists right there for them to cultivate if they can.
Thanks, Chris. I just wanted to try to.
The other thing, I mean, if you want to be a little more complete about this.
Yep.
There's gas in the Black Sea, offshore Romania. And for that, and very probably a great deal more than has been discovered so far offshore southwestern Ukraine, for that matter. But there's big gas that's been found offshore Romania. Now, it hasn't been developed. It'll need to be brought onshore. It'll need to be connected to the grid in Romania. The grid in Romania will have to be materially redone in order to handle the volumes that are going to have to come across it to into the rest of Europe. But there's more gas there than you're going to need in Romania. So there's gas there that should be coming into Europe as well in a longer term view. But that's probably a decade away, right?
I guess, Chris, to that point, this is Gerald. I was wondering, I heard that Ukraine has, I don't know, the second largest nat gas reserves in Europe or something along those lines. And it was unclear to me why they had never developed those. Because
it was not convenient for their masters to have them do so for so long. It was better for Russia proper to provide gas to the Ukraine than it was for the Ukraine to be self-sufficient.
Got it.
So, but I tell you, whatever the estimates are for Ukrainian gas, they're low. The place is lousy with gas. We tried to do a deal over there for about 5 years, a long time ago. and could not get anything done because of the corruption problems. But we tripped over uncounted gas all the time. So it was a huge opportunity 15 years ago. And for the most part, it has not been developed. It remains a huge opportunity.
Got it. Because it's
A
competitive.
tough place to do business, though. Jesus. Not only do you have all the corruption and everything, but you got all these Russian mafiosa hanging around the place. I mean, it's challenging, shall we say.
Chris, did you see Jack's question in the chat?
No,
He says, what companies or governments would execute the Black Sea gas retrieval and marketing of it?
well, right now, the Romanian stuff is owned by the state, the rump of the state oil company, Petrom, and the rump of the state gas company. So, so it will proceed on a schedule which is in part political, unfortunately. You could probably do a lot better if things were otherwise. Exxon had half of it, and they just sold their half to the rump of the state, the old state gas company. I'm going to say 18 months ago or something, because they could not make a deal with the government to adequately compensate them for the gas. In Romania, you can buy Russian gas and pay whatever the hell you want to for it, whatever the price happens to be, very high. But if you produce the gas in the Ukraine, or I'm sorry, in Romania, there's a 70% tax on net profits in addition to the income tax. So if you happen to produce it in Romania, you don't get to keep very much of the money. And to develop a great big gas field offshore Romania, when things like the platform, the rigs that you're going to drill with are going to come from the Gulf Coast, probably. The platforms are going to be fabricated in Norway or the Gulf Coast or whatever. You're going to tow all this stuff halfway around the world and set it up in the bloody Black Sea. The unit capital costs are going to be very substantial, even for a very large gas discovery. So Exxon could not get the government to drop the 70% net profits tax, even though it was clearly in the interest of the country to do so.
Well, Eddie, I think back, because this is part of the EU here, but is there like what is the EU energy policy? Because you should, we're in wartime mode here.
Okay, well,
You're on mute.
there's the EU and then there's local stuff.
Yeah.
And you can't, in a place like Romania, you can't say, well, the EU law is going to govern here, because it isn't, Mark.
Oh,
Just isn't. Yeah.
fair enough.
But it's actually significantly worse than you think, guys, because before the war began, the dependence of Europe on gas in general has increased instead of decreased over the last couple of years. I think there's something like more than 32 megawatts of gas plants in the pipeline going forward all across Europe. And I'll send a link to a sort of an energy monitor that came out a couple of weeks ago, and something like 90% of the gas is imported, 85 I think, and there was no sort of plans in slowing that down, contrary to what the the Euro energy proponents obviously say that need to wean ourselves off of gas, but it's actually not the case. And it's they use it for electricity production, right? And heating, of course. So in that light, it's even more it's even more difficult. So they have an increased problem, and 40% is Russia. So it's not very, very difficult to solve, I think.
Yeah, in the short term, it's impossible to solve, right? Is what it is. So.
And you're doing it against an environment where you're discouraging investment in fossil fuels. So it's hard to get a strong commitment to make investments in an area that people want you to stop investing in.
Yeah. Well, in hindsight.
Yeah, I think Stefan, Stephen, I think you and I talked about this. It's nuclear power. It's strange that the Germans, in particular, were so quick with dismissing nuclear power and dismantling that. It doesn't make any sense whatsoever, and even if the war wouldn't have taken place, because that's a much greener solution and much more robust solution.
Yeah, the planning committee got that one a bit wrong, say the least. I mean, what Germany did with that was just bad planning all around from a nation that is usually good planners.
Right. I think it's rooted in these, the couple of incidents that have taken place, obviously over the, let's say, last 20 years in Japan and Russia and a couple other places, and that have sort of taken a disproportionate sort of scale of fear, like our fear of the sharks. When you look at the data, there's nobody dies from sharks basically, but everybody's very afraid of sharks. And so the same for much improved designs of nuclear reactors versus the ones that are 20, 30, 40 years ago.
It's interesting because that's one of the mistakes that everyone's made on energy is being afraid of trying to find the better solution using existing stuff, the cleaner, safer way, than it is to just stop doing it altogether because you don't want to try and find a better solution. That's been the problem with energy policy in most nations all along. Too ideologic.
Yes.
So I have 2 devices down, 1 to go. My phone here. I think this energy transition, short-term, long-term, should be a theme we got to focus more on.
And maybe we do a special on the deep dive into energy transition. I think that's fascinating.
Yep.
Well, we should also bring in the shipping and the offshore folks, which is something I did 10 plus years ago. So I'm interesting. I feel like I've been duped. Europe's been duped, and here we are.
More to the point, Europe feels like Europe's been duped.
Yeah,
But that's hopeful.
And by the way, this also is sort of a side comment, but kind of important. I just returned from a 10-day trip to Europe. I saw Stephen's comment about it. The US, I think, was less than 10% sort of has the war in Russia and Ukraine as a massive issue. But 70% of Germans is afraid of a World War III. There's a very significant increase in prices on Amazon for iodine potassium tablets. And in multiple countries, there's been a raid on pharmacy. I'm not joking, on pharmacy for them to buy. And we're talking about hundreds of thousands of people in Belgium, the Netherlands, Germany, etc. That just basically is out of obviously fear and panic reaction because these tablets. And there's a general sentiment that obviously it's because it's much closer physically that there's a potential threat of a doomsday, and that's much stronger over there, and you feel it, and it's noticeable than over here.
And I think that's why the NATO nations got so tight when this started, instead of the way they're acting previously, is they knew they needed to come together to address this problem because they couldn't do it. Any one nation in Europe couldn't do it on their own.
That's right. I think that's one of the, if there's any silver linings, that's one of the silver linings.
Yep.
The
And
EU
it'll fix the priorities for a lot of the issues that had been real political stumbling blocks will become much clearer what the right answer is for nations than the practical answer as opposed to the ideological one.
Yeah. Right,
Good.
folks, I have to jump. Great conversation to be continued.
Me too. Thank you
Thank you all.
Stephen, for kicking
Thanks,
it off.
Mike.
Thanks, everybody.
See you in a couple weeks. Bye-bye.